G'day. Just started this session, and I'm going to talk about what I think is going on, what levels to watch. It's early, what is it, Wednesday, nearly 12 o'clock afternoon, Melbourne time, and I'm just going to wait for a few people to come online if they join. Give it a few minutes. I'm sure people are busy worrying about what's happening to Bitcoin, and so I'll just give it a bit of time for people to catch up, and I'll just shut this music down a bit. Let's see on YouTube. Okay, so that's up and going. Quality there, cool. Quality's there. Let me just wait for a few people to come online. And then I'll start. Let's look at the weekly, see what the weekly looks like. Weekly looks shit. I don't know. All right, there's not anyone online yet, so I'm going to start. I'm going to start just going through the basics, fib checks, and so on. Now, if I ignore the top, we're still within range. So this is the key thing. This looks like looks like a good support area. So I've got two levels that I'm interested in, here and there, two levels. So this is on the 12 hour. Now let's look on the daily, what it looks like. And I'll need to get confluence with my fib levels to make sure this works right. So this seems to be okay. Potentially, this is where we're going to find support. And I can change it around, flip that around a bit. So that makes sense. So I've chosen to ignore the top strong resistance level, so I'm going to use that as a reference point for my fib 0. And then you can see that the rest of the fib levels have confluence, and so this could be potentially support. So this neckline potentially can be support. Let me just change the background for that. Okay, I do favor this one here actually, right here. It could potentially come down there. So there's two levels. This is one. So what we want to see is on the indicators, RSI is pretty much extended, and it's possible that we can have a reversal here, a reversal meaning a bounce. And if we look at our moving averages, if I put that's the 1020 on the daily, and if I get the weekly 34 moving average, that's the one that I'm interested in, this weekly 34 moving average, and this is the my weekly 10 and 20. I'll make it 21. So that's going to be our resistance. This 21 weekly moving average is currently our resistance level. That's our resistance level. And but turn off the alerts. I don't want to hear all those alerts going off because it's dropping. So I'm just going to stop all my alerts. Go back to the daily. Oh, what did I go? Far out. I lost my other chart, BTC, USDT. Was it my Binance chart? No, where was my chart? Oh, Coinbase. That's been in Coinbase. Okay. So now we lost a few key levels. We're going to have a lot of resistance on the way up. Looking at this, the RSI has pretty much dictated the level that we're going to pull away from, and it's actually falling shorter each time we drop. So this was the RSI level that was critical, and once we dropped this level, we were done. So that has confluence to the top. So the RSI, that was our selling point there, right there at the top. It broke this support line on the RSI. So the daily RSI does come into effect, and now the RSI is way overextended, so it's about 20 something percent. I'm looking at these other indicators, wave trend, and you can see it's just on the daily, just going down. So what do we look for to jump back in, to go long on the daily? Well, we've got to see this crossover, similar to this one here. We need something crossing over like this. This one has pretty much we're almost overextended, so this is still descending, and what we need is a nice, if we get a nice daily bullish candle, and this level could be the one, but I'm not going to guess. I'm going to watch it. I will respond to what the chart tells me, not what I'm thinking is going to happen. What I'm telling you now is to watch these indicators as evidence for supporting the bounce. Right now, there has been no bounce, and this wave trend, which is freely available, it hasn't crossed over. However, I can see with this indicator that we are getting a reversal pattern with momentum slowing down. Just like here, we had a reversal where these dots are basically showing pressure to the upside, so overextended. So these indicators are pretty good, and using all three indicators gives us an idea as how we're progressing. So this RSI is way overextended, but you can see how it could really still go. That was a COVID scenario, so I don't expect that to go that low. But if you look at the other ones here, we're almost to that region with RSI, with oversold conditions. So this weekly 34 moving average of the orange one is my area of interest. And it does have confluence too. It's not quite there yet, but so if for that level, if I do it, it's about 39,600, and I'm interested in that. And moving forward, Looking at the weekly chart, the weekly chart doesn't. So what we need to do is look at the bigger picture. Let's look at the monthly chart. No, wrong chart there. The one on the right. Here we go. I need to go monthly. Come on. So you've got the monthly. What we're looking at is the bigger picture, and in the bull run on the monthly, you can see what happened here. So let's just highlight certain things. You can see the monthly moving average of the 10 and 20. The monthly, previous cycle, we had a few monthly bearish candles, and these are usually a 30-40% pullback. And what tends to happen is the 10 and 20 acts like support on the monthly. So the 10 is actually the 10 that's acting on support. We've never seen the 20 being tested. On one occasion, I think it's there. That will be the daily 34 moving average. So looking here, I do see this level potentially, which is about 36,000. So looking at the indicator right now, it doesn't quite give us a value, does it? Let's do. Will that show the values? No. Why doesn't it show me the values? Okay, what I'll do, I'll just add a indicator, separate indicator. Moving average. And I'm hoping it's going to show me the value. So I'll just move that to the 10. So, okay. So the 10 monthly moving average is 36,000. So right here, we can expect support, a major support level, the 10 week, a monthly moving average. And that's about, at this point, it's about 36,000. As this comes down, I'm not sure what's going to happen with the monthly. It could keep moving up. But this monthly is going to be very important. So we have another 2 weeks for it. And what we want to see is some maybe touching that point and then a push up, very similar to the previous months, for this bull trend to continue. If we use the past as a reference, it could basically mean that this reference points where the monthly touch the 10 monthly moving average or exponential moving average, we see a wick as it progresses. So what we want to see here is the same. We want to see that this touches it and the month close with a wick. If the monthly one goes below the 10, which is about 36,000 at this point, then I would say we're going to start doing something of a bear market. So you can see the monthly there. This monthly candlestick almost engulfed the previous month. So you can see that is a bearish sign. Here we had the doji, which is not a sign. So this monthly candle is very important to give us, if this monthly candle engulfs this one here, then we are going down. Most likely we'll continue to go down. So what we've got to see the next 2 weeks, we need to see this monthly candle not be consumed or engulf the previous. So it's pretty sad if that's the case. It just means that we're going to go potentially along a downtrend, and if that's the case, so we're talking about scenarios here. That level is definitely a target, and worst case scenario, the body of that monthly candle is where we will head to. So I'm seeing two scenarios there. What's happened to my music? Okay. And the indicators pretty much support the thesis. So you can see here on this indicator where we got crossover. All these crossovers where the green crosses the red. Now here we have the red coming down, and when the green hits the 50%, so this is the monthly, if this green indicator hits the 50%, that's the start of a bear trend, bear market. So I'm going to watch this green. The energy is already low, below the 50%, the grey. This green one, if it goes down to the 50%, then it's a bear market. So that will reflect this candle as well, the monthly. So just looking at it from a monthly perspective, when we need to see the next 2 weeks, see what this candle does, and that will give us the picture as to what's coming. At the moment, we are nowhere near to call it a bear market, and we're nowhere near to say things are bad. But the deep pullback is basically happening, and I did talk about it prior to in many of my videos that I expected I expect the ABC D move. So that's my A. So if that's my 0 or A to B, I expect and I thought that this is a likely scenario to play out, and it's pretty much there now. So we've got to see this as support, and I think the 618 along with the 38 is a good spot to buy right now. So yeah, this measurement usually works. Slightly overextended, to tell the truth, more than I expected. So let's see, measuring, yeah. So we're slightly overextended. So anyway, depends on. So we can see a bit of a rally, a bit of a candle on the daily. So now we can look at. So this level is. I'm interested in this level because of 618 on the macro level from here. So my reference is from that point to this point here. I'm not including the top. I think this one's a bit of overextended, and I see this level as the major resistance. So I'm using it as a reference point, and you can see in many cases it does line up with the fib levels. This 34 weekly moving average is, I thought it might come, this might continue to come up if this keeps going sideways, and then I would like to see that potentially that move. I do see this level as a reversal to the upside, and then I'll see the 21 weekly moving average as a resistance, and then back down again, and then we'll work out what's happening there. This is what in my mind, the most likely scenario to play out. So next day, this daily candle and the 1 or 2 daily candles. So you see, with most of these reversals, there's a few days involved. It's not 1 or 2, 3 days potentially to see the reversal to go back up. And then this 21 weekly moving average, if that was the case, and if this was the area, I can measure this fib level, and it's not quite confluent with the 21 weekly moving average and the fib. So this might have to go a bit lower, potentially. Let's just clear this up a bit. So going for this scenario where this is likely to be support. So if it is likely to be support, I'm going to use my fib measurements. If this was the area, the 34, No, it still doesn't have it. It doesn't line up. So the moving 21 weekly moving average might not play a resistance at all. These fib levels might, and that's about it. So let's, yeah, it might have a bit more to go, about 40,000 potentially. But this area is very uh, important because when price came up, it found this level to be significant resistance. It stopped it in its tracks, and then we had price move back. And then we saw when price came back up, we saw here's a wick, it pulled it back, and then went up. So this level acted as a strong resistance. Therefore, we should expect this area to play a strong support. And it's either going to be this fib level that plays a resistance and will come back down. And if we're lucky, we'll see price come back up to 47,000 and then pull back. So definitely we will have a pullback. I don't actually can't say definitely. We might be in a lucky scenario where we break this level with a real good strong rally, and then we find it as support and then continue up. That was the fractal I did the other day. Um, let's see, where is it? Let's see. There was a fractal on my post, and just check it out. I'm talking about that scenario. So this is the fractal here. So if you look at this, I did talk about, I won't play it. Hello. So you can see the previous, in 2017, where that played the same scenario is what I'm looking at as a bullish scenario. So you can check this video out. It explains what I'm thinking of and a likely scenario for the bullish case. So we have no confirmation that it's going to be bullish. And I'm explaining this. So in this video on the left, which is current price, I did say we're going to come down to this level. Now we've met that level. Now we've got to watch what happens. Okay. So where are we? That's not the one I was looking at. That was the one I was looking at. So this fractal is what I posted before and based on this level. Now, as a trader, how would you take this? How would you enter? Well, I wouldn't just jump in with an assumption. I like to see something on the 4 hour. So I'll be watching the 4 hour at the moment to see what it does. and what my indicators, remember I said this indicator and RSI turning up. So I like to see this indicator or a bullish daily candle. And what we are trying to look for is, so what we had before is this level, higher low, higher high, I mean another higher low. So we're looking at the trend. This was the highest high, or the higher low at the most. And when we lost it, when we lost that trend, that top, we descended. So now this is our reference point. We need to see Bitcoin break this level, which is about 48,000. We need to see it break it before we can go bullish. And if it breaks it decisively, then we are halfway there. And then definitely, so in the coming days or week, we need to see this break this level, come up here, and that's when I'll go long. Until then, I'll be trading just to trade. I won't be hodling. I won't be jumping in to go long with the majority of my money. So until that level is reached, I'm just going to pretty much play it smart. Don't care about losing it and missing out. What I'll do is just watch this level. And so for now, the 34 weekly moving average has given us a good case to buy the 618 level on this macro. And the worst case scenario is this white line here, sorry, this white line here is the next level down, which is, when I look at it, this is where the inverted head and shoulders took place, and the neckline. Okay, so now the neckline could play support here, across there. That was the neckline. So you can see support, resistance. So that is the next one. If this doesn't hold, this is where we're going. And that is pretty much, if I look at it from the tweeze, so if I look at it from the right side to that level, that is the 10 weekly moving average, really, on the monthly, that one there. So that's the monthly 10 moving average, which is still acceptable. And then hopefully in the month, this remaining month, it goes back up. Now, that is what I'm looking from a big picture perspective, not a today's trading method or trading opportunities, not a day trade, just looking at the big picture. So, and if we lose that, we've pretty much in a bear market. So we've got to see this, how this monthly candle closes. Let's see how this weekly indicator looks like. So you can see the weekly indicator has passed, both signals have gone to the 50%, which is shit. That is bad. And the momentum on the weekly trend has changed. So we are changing weekly momentum and weekly trend. And that's evident there when we lost up there. So it's not looking good at all for Bitcoin. And the alts will follow suit. Bitcoin's king. So the alts aren't going to do any. So if you're going to hold to your alts, don't expect much for them to keep going up, unless we see a bounce here. And so now let's look on the daily. Here we see a reversal potentially. Potentially we can see, but the thing is we're very well low. So what I want to see on the daily now, to be seeing a bounce, is see how this crosses over. Each time it crosses over, we need to see this crossover. These two signals cross over to potentially see a reversal, and we're not there yet. And you can see this green line here is my daily 200 moving average, and we lost that as well, and that was very important. Yeah, the daily 200 moving average, historically, you can see that was important. And here, that was, once that was broken, that was the start of the bull trend. When the 200 daily is lost, you can see once it was broken, yeah, we got a bounce, but it's also a very bearish sign. So if we can recover above this right now, above in the coming day, then we have some hope. But at the moment, it doesn't look good. And so yeah, there's no trading opportunity today. There's no, yeah. So what I did yesterday or the day before, I did buy the bear tokens. Unfortunately, fortunately for me, that is good. I'll make money on it, but I'll lose more with my Bitcoin holdings. I'm what, 50% out with my Bitcoin, and I've got another 50% left, and I'm looking at when to exit that out. And I explained basically on the monthly, that will give me, and the weekly and the monthly will give me the indication to either sell all my coins or hold on to them. So if I buy now, I'm going to be much more ahead on Bitcoin because it's dropped a fair bit. But why would I buy something when it's going to keep going down? So that's what I'm looking for at the moment. Right now, it's right at the knife edge. This spot is the perfect spot to buy, and I do expect a bounce. So we just drop right now, and it might keep slipping. So let's look at the hourly. Okay, so the hourly we started to see a bit of a candle, and it's hit my zone, as you can see. Small time frame, it's hit my that level there. So that's a good sign. As I said, that was previous resistance. This should have a response, and maybe I might buy a high leverage trade. Yeah, so I might buy a high leverage trade and just go for a short bounce and just make some money there at the moment. But I'm not going to sink all my money in the big money into this until I see a reversal pattern of some sort. Reversal patterns of this nature. So you can see how this was a reversal, that was a reversal. You want to see something build up. The good thing about this one, so whenever you see a reversal, is think of it this way. We hit the top, that's 1, 2, 3. Yep, that's 1, 2, 3, and we should see a bounce. So the it's basically the alley 1, 2, 3, 4, 5. Yeah, and this one is the A, B, C correction wave, deep correction wave. So theoretically, this is an area to buy based on Elliott and based on just wave impulse. This is the way, and this was my 21 weekly moving average. This is the 34 weekly moving average, and this is my final straw. If this breaks, then we're finished. We are going down, and so you take the risk. Do you think people are going to buy? Well, I do think this is the area that was the initial target, and I used that method many times before, where that to that, and it's pretty much on the money. That method I can use. I'll show you where it's taken effect many times before, just to give you a story why that is a strong tool. So again, that was the bounce. So when you get that bounce, hit somewhere and close enough, makes sense, the target's hit. Then if you look at previous all-time high in 2019, where is it? We did the same here, 2019. You get that measurement to that level. So if we stretch it out a bit, and you can see, so that there, let's get it right on the money, right there. So it bounces, and it's close enough to that level. So let's actually break it down a bit more, so it could be much more clear for you. Here we go. So that was one of them. And here's the other one. So we get the top. Hello, there we go. And we bring it down. Actually, this one didn't quite work that way. Let's do that again. Do we include the wicks? That's the question. We ignored the top wick. I think that's overextension, and that's almost, not quite. So the actual fact that it overextended. So let me have a look at that. So if we do from there to there to there, you can't see it because it's in black. Let me just change that to white. Hold on, change that to white or yellow. So the wick doesn't quite do the job. So I can't use that wick. I'll have to use that there. And then, yeah, so that it's 886 extension from the swing high, swing low to the swing high, 886. So if we do that, actually, what am I doing? This method was right. That was it there. Stupid me. That was it. I was looking at the wrong way, wrong perspective. So what I was making the point from the top to the bottom, that AB equals CD works there as well. I just got my bearings wrong. And I believe 2019 was similar, or 2017 was similar as well. So if we look at 2017, let's get that out. Just got to get the right scenario there. All right, here we go. So if that's the A, this one's really big, and applied to this one. This one is, well, you can say it did it up to that point there. So that worked as well. That was a target. So using that model from there to there, hits a target all the way down to that point there. And if we were to use, this is the all-time high in 2017. If we were to ignore that wick and just use this scenario, well, it's still going to have confluence, isn't it? So if we ignore these wicks and just use that, the ABC wave, similar to ABC here, it also works out to be the same. So that method is applied to where we are today, which is here. If I do it right, it should be right. And therefore, we should see a good bounce moving forward. And that's what we've got to look for. And if that is the ABC correction, then we should get a real high bounce. And the bounce should be, well, if we're going to have any chance, it has to be above this 0.5 Fibonacci. It has to be above this bounce. If it drops below that, it's a dead cat bounce. If we have a decisive break in the coming day or weeks, or coming days and weeks, if we hit the 0.618, which is most likely to be resistance, that's okay. That fits into the previous fractal that I had. So, yep, a few scenarios I'm looking at, and hopefully it does work out that way. Right now, that's all I got. Hopefully that helps you guys out to play a few scenarios in your mind and to understand where the key levels are and what possibly can take place. Right now, I've seen, so if I minimize this, actually just go to one chart. If I get rid of all this, let's get rid of some of this. I did see this on one of the guys that did it. There's a few scenarios here. We have this, and basically it broke that descending wedge, hasn't it? So there was that little hope that we had that this would bounce, and that would have been pretty much, and it's still bad really, left shoulder, head, and right shoulder. So we didn't have that scenario play out, and we didn't have this potential bounce here to do a breakout. So both scenarios are nullified, and so we don't even need to look at that anymore. That were the possible scenarios. And what do we have now? They've been ruled out. Come on, this will be good if I can click on it. Okay. We go back to this this neckline, and can we see anything playing out? Can we see anything that could be a reversal? So that point there, maybe, potentially, when you stretch it out. So there is a slight possibility, very slight, ever so slight, that this one here. So what we have is, from that point, we have one contact, second contact, potentially third contact, and then fourth. The fourth one potentially breaking out. That is potentially a scenario that can play out, and I will be watching that if that can play out as well, and then I'll go long if it breaks that line. So at the moment, you can see that pretty much acting as resistance, right? This trend line is acting as resistance, and it's validated because of the touches. We've got 3 touches so far, so you can't ignore that. So we want to see this fourth touch come. This is a very steep descent. Even if so, it doesn't disqualify it. Other than that, I'm really struggling to see what else formation. We have levels, but formation wise, we actually played this rollout, right? We played this. This was a target based on this ascending wedge, right? So we hit our target now perfectly. The root. So this was a target once we broke this level, and we came all the way down to the target right here. Well, that's the target anyway. We're not quite there yet, but this roll might do it. So we might have a bit more to drop, and that, so we might have a bit more to drop. This is the range, which is 37, 38. And I did say this was a strong resistance level. And when we broke it, so when we broke it, it became tested and went up. So this second level is much more of interest in my opinion. And when I had my 34 weekly moving average, that one there, so it's not up that, it's not up here, my 34 weekly moving average, it's here. So it's not perfect to, it's not perfectly here, but we might get a wick here. So yeah, I'll be watching this. It's not quite there yet, and it is still dropping as it seems to be, isn't it? So if we look at the day, 1 hour, so that's, yeah, that is the 1 hour. So if I get in close, it's, yeah, there might be more to drop to my 34 weekly moving average. I learned this from some seasoned trader who posted on the internet. The 34 weekly moving average is our neck. Now we've got the 21 weekly moving average, and you can see that played its role, but it failed. And then it acted as resistance when it bounced, and now we're descending. So once we lost that, we know we're going to go down, right? That's why we had this crappy rally. It just didn't make it back up to 21 weekly moving average. Now the 34 is going to come into play, and if we lose that, so if, in my opinion, if we lose this level, we're finished. It's, I reckon we'll be bear market after that. Looking really negative. Yeah, so definitely, and yeah, pretty much it. Look, it's headed for the 786. It's not looking good for Bitcoin and the crypto market in general. So I'm going to leave it at that. Hopefully, you guys benefit from it. I don't know. I haven't seen any questions, so that's all I have. All the best. Talk to you soon. Bye.